In this video, we'll show you how our 421G tax exemption and abatement projection model works. Everything in blue are inputs, and everything in black is a formula. Example, these are all formulas. These are inputs, primarily because these are actual historical figures that are available in the property tax records. So let's take a look at the example mentioned in our article. Go to Google. You can search for NYC property tax, look up property tax bill online NYC. We personally prefer BBL lookup. Gets you to the same place. Let's type in the address. And you'll see that this is the account history. Property tax is actually billed. This is very useful. As we discussed, these are the quarterly tax statements for this specific condo unit. And notice that because of New York's fiscal year, which overlaps 2 years, you'll see that they are grouped per fiscal year. So all of the abatement and exemption numbers should be the same per fiscal year, which makes it easy. It means you don't have to look through 4 statements, you can look at 1 instead. You can also go to this tab, Benefits - Business and Construction, to see data from the Department of Finance on the remaining abatement. And here you'll see that this will be reflected in the current property tax bill, and this is what is proposed for the next period as it phases down. This is a non-landmark building, and this is, as a result, the benefit year is 10 out of 14 for the abatement. So it's showing you what the base abatement rate is. And all of this will tie out to the property tax bills and to our model. So if you take a look, let's go back to our model. We should start with, even though this is the latest year, we should start with the prior years just so we can model out how it looks as we start from the original top level exemption level of 59,031 and as it fully phases out. So this way we can see how it phases out fully. And remember, the abatement starts phasing out approximately 2 years later. So with the 421G abatement, it is a steady level, and then it phases out in the remaining 4 years. So this is how it looks, and we can tie these numbers out on any property by simply looking at the property tax bills. So let's take a look. For example, this is the latest one, and you'll see actually that these numbers will be the same for all 4 statements in the same fiscal year, right? So this is 9181. The abatement, this is the abatement, is 7916. And this is the reduction in the assessed value. So this is the exemption. So if you just compare it to another quarter in the same fiscal year, you'll see that it is the exact same number. So as discussed, it changes per fiscal year. If you go down to the next fiscal year, you'll see that again, this is different. So the assessed value was a bit higher the prior year because it's in the process of being phased out, 7916, and so on. If you go to this year prior, you'll see again 7916 because it hasn't started phasing out for the abatement yet, but this is the top level, the original base level for the exemption amount. So if you just go back in a few more years, you'll verify that in these 2 prior years that indeed the exemption amount stays here. So this is the original maximum exemption level, and indeed it is the same for the prior year as well, 59031. And you'll see that this ties out with our projection model. So we start with the year with the top line, and then as it starts phasing out. So this is the 59031. It phases out, and this is the abatement level 7916. It starts phasing out 2 years later. So for this specific unit, you can see that the property taxes are quite low right before the phase outs begin, but it picks up dramatically as both first the exemption and then the abatement is completely phased out. So we're looking at a difference from something like $3,000 in 2017 to a steady rate of over $20,000. And remember, this is for the sake of conservatism, assuming that assessed values do not increase in the future. As you can see here, that clearly was not the case, despite a soft property market in New York City and nationwide during this time period. Assessed values have actually increased. So as a property owner, you'll definitely want to engage a tax certiorari firm to dispute any increases in assessed values during the 421G tax incentive period. Many property owners forget to do this as a building, and as a result, assessed values can get out of control, and then they are surprised when the abatement and assessment ends, or exemption ends. So please be careful, and we hope you enjoy this model. You can download this using the link on this page, the whole Excel model. We hope you've enjoyed it. If you did like this video, please leave a comment, subscribe to our channel, or like it, and we'd very much appreciate it and would be happy to respond to any questions you might have. And again, just leave a comment on YouTube or whichever other channel you're watching, and we hope to hear from you. Thank you so much.